Hello everyone, welcome back. We mentioned the stock of Concentrix ticker CNXC on January 17th, price around $49, and now it is trading at $53.35. Today we're going to cover Celestica stock. But before we start, let's take a moment. This morning's news of the tragic plane crash between American airline plane and Black Hawk helicopter is truly heartbreaking. Our thoughts and prayers go out to the victims, their families, and everyone affected by this devastating event. In times like these, it's important to come together, show support, and respect those grieving. Our deepest sympathies go out to the victims, their families, and everyone impacted by this tragedy. Let's get back to the business. This stock just got slammed after China's DeepSeek AI made headlines. But wait, good news for the stock. Fourth quarter earning report beat, and 3 top analysts just raised their price targets on the stock this week. Are investors overreacting, or is this a hidden gem ready to bounce back? Let's dive in. Celestica Inc., ticker CLS, is engaged in designing, manufacturing, and providing hardware platform and supply chain solutions. It delivers supply chain solutions globally to customers in 2 operating segments: Advanced Technology Solutions (ATS) and Connectivity and Cloud Solutions (CCS). The ATS segment consists of its ATS end market and is comprised of its aerospace and defense (A&D), industrial, health tech, and capital equipment businesses. Its capital equipment business is comprised of its semiconductor, display, and robotics equipment businesses. The CCS segment consists of its communications and enterprise end markets. The enterprise end market is comprised of Celestica's servers and storage businesses. It offers a range of product manufacturing and related supply chain services to customers in both of its segments, including design and development, new product introduction, engineering services, component sourcing, electronics manufacturing and assembly, testing, and systems integration. Celestica shares fell in lockstep with other tech companies Monday as China's DeepSeek low-cost AI model rattled the sector. Shares trading in New York, the stock is down 20% to $97.11. Celestica, a Canadian-American supply chain solutions company, has leaned into AI for various applications, including energy delivery and improving predictions on its platform. For example, one of Celestica's products is the D5000 switch, a networking device that connects servers, virtual machines, and storage devices. The device was created for modern data centers and by extension their networks to meet the growing use of AI technology. Unlike many of its Western rivals, DeepSeek says it uses less advanced chips combined with innovative model training methods that forego the need for expensive data and energy infrastructure. The emergence of AI startup company DeepSeek, a competitor to OpenAI, has upended the conventional thought that companies using AI, such as Celestica, need expensive, cutting-edge computer chips that are powered by data centers and require massive energy supplies. Celestica's decline follows those of other major players in the AI world, including chip-making giant NVIDIA and Microsoft, whose stocks are down 15% and 3.5% respectively. Here's some good news about the stock. Celestica Inc. reported earnings on January 29th for the period ending December 31st, 2024. January 30th, pre-market stock went up 19% at $119.68 after Q4 earnings beat. Celestica Inc. reported profit of $151.7 million in its fourth quarter. It had profit of $1.29. Earnings, adjusted for non-recurring gains, were $1.11 per share. A quarter ago, it was expected that this electronics manufacturing services company would post earnings of 94 cents per share when it actually produced earnings of $1.04, delivering a surprise of 10.64%. Over the last 4 quarters, the company has surpassed consensus EPS estimates 3 times. The electronics manufacturing services company posted revenue of $2.55 billion in the period, missing consensus estimate by 2%. This compares to year-ago revenues of $2.14 billion. The company has topped consensus revenue estimates 3 times over the last 4 quarters. And it's got 3 analysts upgrading the price target this week. On Tuesday, January 28th, TD Cowen Securities analyst Daniel Chan raised the price target from $70 to $107 and maintained it a buy. Daniel thinks the reaction was overboard after shares fell 28% on Monday. The analyst says that while risk exists for Celestica, he thinks that lowering infrastructure costs in the long run will be good for all of AI use. While many unknowns remain, our view is that there is potential for material upside if the cost of AI is lowered and drives higher adoption, he said. On Monday, January 27th, Cormark Securities raised the price target on the stock from $93 to $137 per share. The same day, Bank of Montreal analyst Thanos Moschopoulos maintained the stock rating to outperform and raised the price target on New York shares to $140 on the back of a rosier outlook for the company's near-term and longer-term outlook for AI-related capex and Celestica's ability to continue taking share. Although Celestica has lagged behind the market this year, investors are left wondering, what's next for the stock? With 3 analysts upgrading this stock in just 1 week, it's clear that sentiment is turning bullish. This could be driven by strong fundamentals, future growth potential, or key catalysts that analysts see on the horizon. However, upgrades alone shouldn't be the only reason to invest. Always do your own due diligence. Analyze the company's financials, industry trends, and potential risks before making any decisions. With the result of earnings report were beat expectations, you should keep a close watch. Strong results could further fuel the stock's upward trajectory, while any surprises could create volatility. Whether you're looking for a short-term opportunity or a long-term investment, this stock is one to watch closely. Let us know what is your thoughts in the comments. Will you buy now or wait for a pullback like Monday? Thank you for watching. See you in the next video.